On Friday, shares of Amazon had their worst day in 4 years, down around 8%. And Amazon had a pretty bad day. Not just the shares. Amazon had a bad day. Concerns over slowing growth in the wake of their earnings, Jason. Shares not doing much today. Now, we should add that Amazon's still up around 40% for the year. So perspective is in order. But what do you make of Amazon?
Well, I mean, every quarter when we talk about Amazon earnings, for many of us, the first thing we look to is top line growth. It's less about earnings because we know that typically they're going to be reinvesting a lot of that money into the business and fulfillment and cloud infrastructure. So it's more about top line, less about bottom line. In taking that into consideration, it makes sense that the market was at least a little bit concerned here. Top line growth was a little bit lighter, perhaps, than what the market was expecting. And I think really the selling is more from the guidance for the holiday quarter, right? And you know, it's difficult for Amazon really to go in there and offer a tight window of where they see that top line going. I mean, they even made the point in the call that really the most of their money in this holiday quarter is made from this tiny window between like the middle of November towards the end of the year. And it's just difficult to predict. So they offer a range. That range didn't quite meet up with what the market was hoping for. And you get the sell off. But I mean, it's not to sit there and think, OK, well, this is a business in trouble. I mean, clearly it's not. But it's a business that does a lot of different things. And I think one point worth noting is that now when you look at the actual retail business, that third party sales now represent 53% of total units sold on the platform. And what that means is that Amazon is bringing outside partners in and using their commerce platform to sell their stuff. It's terrific. It's very profitable, but it does play out on the top line number a little bit. So you sort of take everything into consideration here. I think they're doing a lot of great things. Amazon Web Services continues to grow. It's now on a $26 billion run rate. Well, that was $18 billion a year ago. So you know, let's not get too worked up. I mean, I'm going to hang on to my shares for now.
Okay, deep breath. I'll keep my shares as well. Emily, what do you think?
Yeah, I totally agree. I think the high margin business, which is the Amazon Web Services, is really going to be the main growth driver for Amazon, along with initiatives that the company probably hasn't even thought about yet. So this is kind of a blip on the radar. I will just add, though, that I think a lot of concerns coming from the growth of Prime subscribers and the question of whether or not the market's been tapped out for people who are going to pay a premium of, what is it now, like $119 a year?
Something like that.
That for a Prime subscription, especially when you have a lot of people who have one account per family. So is the growth there really maxed out? And did they achieve the Prime customer growth that they were hoping to when they acquired Whole Foods and they started doing the discounts for Amazon Prime members at Whole Foods? Was that a better deal for Whole Foods than it was for Amazon Prime? I think that's to be determined, but either way, I think it is going to be concerning for a lot of people seeing the growth of Prime subscribers starting to slow down as the market just begins to get tapped out.
Yeah, I mean, we're you know, faced with the conundrum of Prime or Costco, Mac. I mean, which way do you go?
Oh my gosh, is
it one or the other? Or
that is Sophie's choice. That's a totally offensive analogy, and I apologize, but I never want to be left with that. I mean, I would probably choose Amazon over Costco if I had to say that. And please do not repeat that to Jim Senegal. But I don't have to. I don't have to. Like this morning, we ordered something on Amazon, and it's coming later today. So my question is, do they have a distribution center in our front yard now? I mean, that is voodoo magic. I don't understand that.
Well, the past couple of years, they've spent a little bit more on fulfillment than they had historically. And they have made the point here that this holiday season, they're going to be spending a little bit less because they've spent so much in the preceding couple of years. So that could play out on the bottom line favorably for them. I mean, whether it does or not, I don't know that it really matters. But I mean, it's worth noting they continue to invest a lot in fulfillment. And the bottom line is, much like Costco, Amazon is looking to provide low prices and awesome customer service. And there was a quote on the call that, for me, this was the best quote of the call, and it's the best quote I've heard from them in some time. It came from Dave Fildes, the director of investor relations, and he said, I quote, "So it's easy to lower prices, but it's much harder to be able to afford to lower prices," end quote. And that, to me, tells you everything you need to know. And that really, I think, is the crux of the competitive advantage, right?
Yeah.
Anybody can lower prices, but can you afford to do it? And for a while, it didn't look like Amazon really could until they could.
Yeah, well, that makes a lot of sense, and I'm thinking back to your question again, and I don't like my answer, and so I'm gonna modify it and say that I don't want to give up Amazon or Costco, because Costco has the treasure hunt, and Amazon will never, in my humble opinion, be able to replicate that treasure hunt mentality, and that's a wonderful thing. And they don't have the free samples. You're not getting free samples on Amazon.
It's a fair statement.
Okay, so lay off Costco.